Good afternoon. My name is Robert James. I'm with Carver State Bank in Savannah, Georgia. We're a Black-owned bank that has been serving that community in South Georgia since 1927. We are also a certified Cdfi. Our mission is to provide the building blocks to financial freedom. It's our privilege to be a part of this incredible conference. I want to thank BBIF, its CEO, Inez Long, and all of the participants for such an instructive and informative discussion that's been taking place today. So we're here to talk about financial justice in banking and philanthropy. And we've been joined by some incredible financial professionals in their own rights. I'll let them give a little background on themselves before we get into the discussion. James Wahls is with the Annie E. Casey Foundation, and Amir Kirkwood is with the Opportunity Finance Network. So we'll start out with brief intros, and then we'll get right into the discussion. James, good afternoon.
Thank you, Robert. Good afternoon, everyone. Again, my name is James Wahls. I'm a portfolio manager for the Annie E. Casey Foundation. I co-manage the social investments or our impact investment platform at Casey. Just a quick note, Casey's mission is to build brighter futures for all children. We do that nationally. We're a US-based and US-focused foundation. We also have an emerging focus on youth and young adults as well. And so for our impact investment strategy, we focus on jobs and inclusion, affordable housing, and closing the racial wealth gap.
Great. Thank you so much, James, for being here and for adding your voice to this important conversation. Amir Kirkwood from Opportunity Finance Network. Amir, introduce yourself.
Thanks, Robert, and James, good to see you as well. Good afternoon, everyone. Again, my name is Amir Kirkwood. I am the Chief Lending and Investment Officer at Opportunity Finance Network, more commonly known as OFN. You probably saw our CEO, Lisa Minson, one of the earlier plenary sessions. OFN is essentially the network organization for community development financial institutions to support in capital raising, the strength of our membership, and then also policy and advocacy on both issues, federal and state and local. My specific role is essentially to help manage what is now currently a $900 million portfolio of investments in community development financial institutions. And we're constantly out trying to seek new ways to bring new investors to the field.
Great. Amir, thanks for being here, and we look forward to an engaging conversation. So one of the things that's been interesting here in the past year or so is that CDFIs have become very, very popular, and particularly in the wake of kind of the multiple crises that we're facing, especially in the Black community, with COVID-19 and the unfortunate continued violence from police towards our community and the reaction to that. The first question I want to really talk about, and really the theme I think for our discussion today, is collaboration. How can we collaborate better between the banking sector, the CDFI loan fund sector, and the philanthropic sector to make a difference and move the needle on some of the systemic issues that have really not just been brought to light, but been elevated in terms of the overall public consciousness. So how can our different institutions work together to solve some of these problems? I'll throw it to you, Amir. Give us your thoughts.
Sure, Robert, thank you. One of the things that, as I mentioned early on, I think is critical is to recognize the strengths of each of the institutions and their value to investors as they seek to respond to the moment that we're in. Robert, you're absolutely right. The last year has probably brought more focus on our sector than we saw for the last 25. And it's also brought opportunities for investors who are seeking to put their capital to use in the moment to find a vehicle that has a longer term view. I think the other thing that is happening is it's an opportunity for long-term investors in our sector to begin partnering with new investors as well. But critical to this is, I think, your point, Robert, about collaborations. It's not just identifying the sources of new capital, bringing the old sources of capital along, but it's also recognizing the strength and value of each of our CDFI members and finding ways to partner together. So a loan fund, which is not a regulated entity, has the ability to lend in a way that allows that's a bit different than a regulated entity. However, a loan fund doesn't have the ability to collect deposits or provide CDs or provide money market accounts. So there are pieces of what both sides and credit unions as well bring to this discussion that if we work together, we can actually provide best value from our different organizations. And I think ultimately, when we then go to James and others in the capital side, they see a much more attractive package than singularly lending to or investing in one form of a CDFI.
That's great. That's great. That's very important. James, Amir said it. You're on the side of the investor. You're on the side of providing us with capital to try to address some of these long-term issues. How do you see it? What would you like to see from us in terms of collaboration to make it more attractive for you?
Yes, thank you, Robert, for the question. So as I think about philanthropy, and especially private philanthropy, we have a unique position, right? Because we have a lot of tools that we can utilize. So we can utilize grant dollars, we can utilize impact investment capital or PRI capital, especially for private foundations, and we can also use MRI capital. But more importantly, we also have influence within the community as a neutral arbiter of conversations among the financial institutions. And so I think for philanthropy and foundations, as they think about what are we looking for, I think it's a question of what can we do to bring folks together? How can we bring the corporate partners together with the community development institutions? How can we think about providing the grant capital and being the voice to push for intentionality among all these organizations to focus on these issues? So as I think about philanthropy, where we sit is a very unique position where we can tap into public sector funds, we can tap into private sector funds, we can tap into corporate, we can work with financial institutions and really be a translator for all those institutions to come together to achieve like one goal around racial justice.
You really touched on a very important point, James, which is the what I believe is the convening role of the sources of capital, because I think solutions, in a lot of ways, solutions will follow capital. And if the investors or the philanthropists make it plain that they will support solutions, I think that will stimulate a lot of creativity. And so I wonder, like, for example, Inez Long has reached out to Carver State Bank about finding ways that we could work together. Our institution is in South Georgia, not very far from Florida. There might be some opportunities for us to collaborate. There's no Black-owned bank in the entire state of Florida. So there might be some ways for us to collaborate on lending opportunities, whether they be in Southern Georgia, Northern Florida, and kind of in between, so that we can multiply our impact. Do you see the possibility of us developing a real plan and strategy, and maybe getting some capital, some grant capital from a philanthropic organization like the Annie E. Casey Foundation to kind of help us to develop a real plan for how to get the dollars out? Does that seem like something that's a viable opportunity that a foundation would look at funding? Yes.
So one of the key factors that especially impact investors and private foundations look for is how can we leverage our dollars, right? Because if you look at private philanthropy, even though we have a lot of money, it's still a small amount when you look at the need within communities. And so we're always trying to figure out what's the multiplier effect, right? So if we can utilize our capital to be subordinate capital, to be grant capital, to be equity, to support co-investment between CDFIs and bank capitals, and really kind of build kind of like that capital structure, then that's when you start to see like that true multiplier effect of our capital as an institution. But what I do recognize is that all of the institutions have to be on the same page, and they have to have an intentional strategy, and it has to be clear, why does this make sense for me as a CDFI? Why does this make sense for me as a NDI, for example? And why does it make sense for me as a foundation? And each of those players have to recognize it and understand what's the rationale, what's the investment rationale for each of them, and then move forward. Once you have that synergy, that's when you start to see other institutions start to look at this strategy and say, oh, this is a viable strategy. We see scalability here. Can we participate in this as well? And you've seen there's examples of that around the country.
That's great. Thank you. So Amir, you have a great background. You've been in banking as well as on the nonprofit side. Talk about what you think are some opportunities for collaboration between the loan funds and the banks as we look to, bring more capital into the sector and really partner up to address some of these situations long term.
Absolutely. I mean, I think the biggest thing is recognizing for investors, and James alluded to this, is that they all have a risk continuum that they're willing to invest along. So not every investor can be subordinate, not every investor can be senior, but they collectively can all provide capital at every sort of attachment point of risk. On the other side, the partnership between loan funds and the banking side can provide sort of a solution to all of that. I always point to, for example, and this is sort of what you were alluding to with BBIF and Carver State, the HOPE model, where HOPE has a credit union and has a nonprofit CDFI. And what they're doing is essentially being able to provide financing to two different types of customers and enabling those that are frankly not ones that can fit within the regulatory risk criteria of a bank, may be ones that can work within the loan fund side, or there may be a piece of the financing for the same customer that could be at the bank side. Maybe that's the secured real estate portion, but the line of credit might have to sit with the CDFI side because it's a higher risk, higher cost part of the financing. So when we think about those collaborations, that's where I think it's really helpful. I think another example is, and we've seen this really dramatically over the last year, the PPP situation, where effectively loan funds did not have the access to any corresponding banking relationships by definition because they weren't regulated, but the banking side could potentially play that role either in the origination side of the PPP loans or more than likely on the repurchase side and selling those loans to the Fed through the repurchase program. So the CDFI loan fund could have been like, hey, I got a line of credit from, OFN with some subordinate credit from Casey, and then I'm going out and originating the pipeline of loans pretty quickly, whereas the bank is sitting there looking at more of a longer term position with that and helping to sort of transfer the loans through the piping of the system with the Fed and the Treasury. It's just an immediate thought that comes to mind where I sort of say, hey, we as a sector always are best when we're reacting in the moment and being able to solve problems. And sometimes looking to what's right in front of us can catalyze those partnerships.
Fantastic. We've gotten a question in from the audience. The question is, how is philanthropy evolving to use its levers of investment, PRIs, MRIs, et cetera, to impact for-profit ventures led by BIPOC? So I'll let you take that one, James, and then we'll also.
I assumed it would be me for that question. So I could talk a little bit from Casey's perspective, and then maybe get some overall industry reflections. So for Casey, our impact investment portfolio is actually a carve out of our endowment. And so with that, we have to have a return of capital plus a little bit more. So typically around a 6-month CD benchmark. So right now, that's just pretty much return of capital. And so we particularly invest in CDFIs and support CDFIs. And then we also will step in and provide private equity capital as well. And so we have intentionally looked for strategies that are focused on entrepreneurs of color. So one of our most recent investments was an Impact America fund led by Keisha Cash, and the work that she's doing to try to support entrepreneurs of color. And we served as an LP in that investment. For example, what you're seeing at Casey and other places is questions about how do we utilize every bit of the capital that we have. So whether it's from our endowment investments down to our grant strategies, how can we figure out a way to bring capital to fold? And one of the examples I can talk about in the South is with Atlanta Wealth Building Initiative, where we worked with one of our CDFI partners, Access to Capital for Entrepreneurs, that Amir and Robert are probably very familiar with, to support their efforts to lend to Black businesses. And what we did was we lined up our benchmarks for our investment to the goals of the Atlanta Wealth Building Initiative, and which is focused on supporting Black business, right? So we are, as a funder, can push our partners to have this intentionality around how do we support Black businesses, especially for that strategy, and then BIPOC businesses in general. Another thing that we are also thinking about is how do we think about what is our investment in CDFIs that don't have the same type of net asset cushion that we typically are looking for, which disproportionately plagues BIPOC-led CDFIs. And so how do we think about having a lower interest rate, for example, to try to improve cash flow, right? How do we think about, can we provide some grant capital to help with reserves and loan loss reserves that goes along with our impact investment, right? And you're seeing these types of questions across the board within the industry. We are a grantee, we are a grantor to OFN as they think about these strategies and how they intentionally support communities of color with their CDFI partners. And so I think what you're seeing in the industry, that there's a lot of questions from top level down about how can we be more intentional to use every bit of our capital to support BIPOC-led businesses.
Great, thank you. Amir, you want to kind of give a response, what you're seeing at the CDFI level nationwide?
Yeah, absolutely. What I've seen at the CDFI level nationwide is, frankly, a lot of CDFIs making a very intentional effort to shift pieces of their business model directly towards addressing the needs of Black-owned businesses, Black-owned beneficiary customers, and BIPOC as well. And what is caused with the CDFIs is to think very specifically about aspects of the financing model itself that become barriers to being able to really service those communities really well. Really quick example and simple example is IFF, a CDFI based in Chicago covering the Midwest, has developed a very specific model in their underwriting process where they don't use appraisals as a part of that approach, because appraisals have a tendency to create biases in the resale value of homes owned by Black and Latinx families in ways that ultimately strip wealth from those communities. And with housing and real estate being the #1 wealth provider for most households, this is critical. It's the difference between 5–10% in some cases of the value of a home. So it's a CDFI taking leadership, but then also having to do two things. One, influence the existing sources of capital, often in the banking community, to accept that they're utilizing those practices, and then finding alternative sources of funding that don't have those restrictions as a part of the capital in order for them to be able to take it, to really bring those strategies fully to life.
You raised a couple of very important points there, Amir, that I want to go into a little bit more deeply. One of them is around this question of loan funds in other businesses, quite frankly, all of a sudden discovering that they need to have a special focus on Black folks.
Yeah.
How much of that is genuine and how much of that is just, there's a shiny object out here, there's a lot of interest and a lot of capital that's flowing, and there's a lot of interest in Black people right now, so we need to jump on that train so that we can access some of the money and some of the opportunities. Talk a little bit about that.
I would probably say it's less on the side of the CDFIs and more on the side of the capital providers that you see a in the moment mindset. For example, the program you're speaking of at IFF was something they started 3 or 4 years ago, so long before the pandemic. Many ways responsive more to what happened in Ferguson, Missouri, and they were seeing in the continued segregation in Chicago. Anybody that knows Chicago knows how segregated of a city it is these days. But I look to BBIF. It's an intentional strategy from day one that says we are going to lend to Black people, and we're going to figure out how to make it work. And we're not going to do it. We're going to do it, put it like this, and whether the capital is there or not, and how easy or how hard it is to get. The challenge, I think, is on the capital provider side, and getting the capital providers to recognize we lend for the long term. We don't lend for the moment. And if you are making an investment in the CDFI, you want to see change in the Black community, then you have to give that CDFI 10-year money, because you need 3 or 4 cycles of investment in order to meet that outcome, not one cycle of investment.
Thank you. The long-term nature of the need in our community is so critical, because it took us 400 years to get into this situation, and it's not going to be a few months to correct some of these issues. James, another question for you from the audience. The question is from a gentleman who is in the private equity business. It says, I spent 13 years in private equity at a Black-led firm. Asset management firms led by minorities and women only receive 1.3% of all capital in the US. How do you manage the complexities around intersectionality, given that the issues faced by Black women are different than issues facing white women, are different than issues facing the Asian American community, so forth and so on?
Yep. So thank you to the person who provided that question. I actually see about 3 questions in that question, and I'm going to try to address each of them quickly. So as I mentioned before, for Casey, our impact investment capital comes from our endowment. So therefore that allows us to do private equity and venture capital investments within our portfolio. And so one of the things that we do at Casey is try to really understand some of the programmatic nuance of the strategies at Casey. And we recognize that the issues that face Black women and Black women asset managers differ than from other asset managers and other populations. And so what we have done is try to really think of, in terms of our investment framework, what is the investment thesis that's being addressed by our asset manager strategy, and who is leading that strategy. So for us, we look at both of those things to identify, is this capital truly going and addressing the need that we're looking for, and try to be mindful of the high level of impact washing that's happening right now in this space. And you're starting to see that with some of the other notable impact investors within the region. However, I will say though that we have a long ways to go in philanthropy as we start to look about how do we shift some of those assets, those endowment assets, into asset managers of color, and especially asset managers that are led by Black men and women. You see efforts from like Ford, for the Ford Foundation, and from the Keller Foundation, and from Casey, and the Kresge Foundation, and Packard Foundation, but I just named a lot of them, right? So there's a number of, and I'm sorry, in the Knight Foundation, just to note because of Florida, But there are a number of smaller foundations that are not as well known. A lot of community foundations that are also looking to have these conversations. And I think it's imperative for folks within philanthropy to share some of these lessons learned as we kind of think about how do we shift some of these assets into strategies that are intentionally focused on supporting Black women and then just BIPOC communities in general.
That's fantastic. We only have a few minutes left here in the session, so I want to give each of you an opportunity to make any closing comments before we wrap up and invite folks to move on to their break. So Amir.
Sure. Yeah, and first, yeah, absolutely. And I guess first off, Robert, thank you so much for moderating and hosting us, and thank you to BBIF for putting on an outstanding day. The only thing I would sort of say in closing is to reiterate, Robert, your point from the beginning, and I think what OFN is increasingly committed to doing, which is figuring out ways for us to partner together. There's more outcomes that we can have as a collective. I think there's more ways we can impress upon investors, both old and new, to move to our field if we bring a full set of solutions to the table. When I worked at Citigroup for years, they provided everything you could possibly want, from a deposit to mergers and acquisitions. And we as a sector need to start thinking a little bit too, like, how do we bring the collective of all this together?
That's great. James?
So I just wanted to emphasize that I'm going to speak from the role of philanthropy, is that we can't let this be a moment in philanthropy. And so we have to continue to push. And there are a lot of people in philanthropy who are pushing to these issues and trying to bring them to the forefront and keep them at the forefront moving forward. But I just really want to emphasize the fact, and to all those in philanthropy that are listening to this call, that it's really pivotal for us to continue to keep these issues in front of everybody. And that's not just with our investees or our grantees, that's to everyone within the ecosystems of your respective communities, to make sure that capital is flowing and continues to flow to entrepreneurs of color and BIPOC communities.
James, Amir, I want to thank you on behalf of Carver State Bank, as well as my other role, which is as chairman of the National Bankers Association. I neglected to mention that on the top, which is the nation's advocacy group on behalf of minority depository institutions across the country. I want to thank BBIF for inviting us to be a part of this incredible conference. Specifically want to thank Inez Long for volunteering me to be here, to not only be here, participate, but to moderate this panel, which has been a great opportunity for me to hear from some really accomplished professionals in various sectors of our economy that are looking to make a difference. I want to invite everyone to enjoy your few minutes of break and then come on back for a great keynote address here later on in the conference. Thanks again to BBIF, and have a great afternoon.